Welcome to the Profit Answer Man, Jason Sisneros. It's great to have you join us today.
It's great to be with you, Rocky. Excited about our conversation.
And you're back again. You were on my other podcast, Rich Your Soul, just recently.
It's a wonderful show. You're a great
Thank
host, man. Everybody on my team, everybody that's watched the show, just raved about how well you do your interviews.
Well, thank you. And we're back again for more. Today, we're going to talk to business owners. Can you share a little bit about yourself and your business?
Yeah, absolutely. Again, it's great that we're talking to business owners because I am one. I've become a giant advocate for the SME community, which is, as you know, small and mid-sized enterprises, 0 to 499 employees. That's how they decided to designate us, right? There's 33 million of us, so I've got a big family, and you've got a big family. You're a big part of that. But I started out in life in a situation which was a big subject of our last show, which was not really the best startup. I had a father that went to prison for attempted murder of me and my mom. And what I have found about most business owners is that all of us have had some kind of trauma in our life, which makes us a little bit rebellious, and we don't want to work for other people, or we physically can't because of our attitudes, stuff. And so the only real option and outlet that I had to make revenue and to build the kind of life I wanted for me and my family was to start my own business. And I did that and promptly crashed 3 businesses right in a row. As I was learning, those were my learning days. And I was able to I had this amazing opportunity after those 3 failures. I fell into a very deep depression, right? A lot of what you do and what I do nowadays on the advocacy side is don't go bankrupt. Like, do the things that you can to keep your business from going bankrupt, because everybody's like, well, you'll just pick up and start again, or you'll go get a job. That's not what happens. You really fall in. I did anyway. I fell into a deep depression. I wasn't qualified really for any other job, and it took me 6 years after the hole I dug for myself, which was $2 million plus, to dig out of that hole. So don't do that, right? That's what we call in the world of exits, we call that an involuntary exit. So don't do that. And so then when I came back, I had this amazing opportunity to travel with Tony Robbins. And I had my notebooks from my failure, and I went on the road, and every business owner that I could find that was in business longer than 5 years, I would ask them a series of questions. I would take my notebook. I would say, look, I did this mistake here. What would you have done instead? And so after 4 years with Tony, I ended up with 3 new notebooks, and I got a call from a friend of mine, and he said, hey, Jason, I'm going through something that you went through in one of your business failures. Could you come and help me? And I was like, oh my gosh, I have 3 notebooks of ways to help you now. Actually, I had 6. I've gotten paid more in my life for the first 3, which were my failures, than I have for the second 3. But I went to his company, and I helped him. I made some money while I was doing it, and then I made some money on the upside. And then I got referred and became a turnaround specialist. So the worst deals, the worst businesses in the worst shape would come to me, and I would turn them around. And then I started doing that. I made them a bunch of money, decided I would start buying companies that were challenged in my own life, and built up a private equity firm of my own, which I sold. At the height of it, I had 36 businesses. When I sold 26 companies that had 6,800 employees for a number a little north of 60 million, with no investors, no debt, and no partners. So that's my history in a bucket. So what are we doing? What does that bring us to now? I know from the last show, that I do a lot of philanthropic work. We put on bulletproof vests and we go get kids from the sex trade. My first love was domestic violence because of how I was raised. I've done a lot of charity work there and feeding people. And then we started this brand called Built to Exit. And that's kind of what we're going to be talking about today, which is the skill sets, processes, procedures that every business owner, when you accept the idea of everybody exits how matters, that gives them that roadmap. Either we help them or we have the roadmap for them to be able to optimize their own exits and build wealth and freedom for their own families.
You said a lot there.
I did, and I did it quickly. Are you proud of me?
You did it quickly, of course. You're good at this. So, we're going to talk about Profit First, but Profit First came out of Mike's bankruptcy. right? And that's kind of where he hit bottom. At the same time, I just finished Gino Wickman's book, Shine.
Mm.
And Shine really talks about every entrepreneur has that thing in their childhood that caused that pain that has pushed them, just like you, to be able to go kind of do that. And then, of course, my other favorite book, which we didn't talk about, is Keith Cunningham, who starts off with that favorite question of, if you could go back and remove 3 of those bad business decisions, how much more money would you have? And, for most of us, it's millions. At least for me, it's millions. Preventing the mistakes by listening to others is super, super smart. I do want to get about to the everybody exits. Before we do that, 2 questions. First off, I know you Profit First and you're a big fan. How has that been helpful for you?
Multiple ways. It's a great book, a great philosophy. But one of the things that we kind of hard coded into our process was the idea around the envelope system and having multiple bank accounts. Because really what that teaches you is that money is not, all money is not equal, right? Profit is much different than operating cash flow. Operating cash flow is much different than free cash flow. The holy grail of why you're running a business is the free cash flow, money you can take off of the plate, and it doesn't affect or impact your growth. And so that taught me and hard coded that what we talk about when everybody exits, well, everybody is running a business, whether they articulate it or they, here on your podcast, this simple concept that you're building a business to create freedom, right? And not the weak freedom. What we're talking about is that your bills are going to be taken care of. If something happens to you, you're taken care of into old age, into passing. And by the way, maybe you leave some for your loved ones, for your kids or whatnot. And so that envelope system really hard coded in me and then became part of my system to say my freedom account gets paid every month, because that's why I'm working. I'm not working to impress people on Instagram. I'm not working for me to reinvest in somebody's get rich quick scheme. I am working and building a machine called a business to set myself and my family free. And that freedom number that freedom account has a number that when I reach it, I am now free to start another business, free to start a charity, or free to do whatever, travel the 7 seas. So that really impacted my life and became, like I said, hard coded tactical advice that I put into my own life and now have helped other people.
And I know the last time you were on, we don't need to go back to it, but we talked about business owners reinvesting in their business from that money. And the fact that if you're going to reinvest in your business, you better treat that money like you borrowed it from the mob and make sure you pay it back, because I think very few, if any, business owners will pay back their investment. They call it an investment. What they're doing is they're burning cash like there's no tomorrow, which puts them in a difficult situation. When
that
you
clip,
go,
by the way, that clip has gone viral.
Yeah,
of me saying if you're going to lend yourself money,
I know
it's gone viral. So thank you for that.
You are most welcome. When people get in that situation where they're behind the 8 ball and you come in as a turnaround expert, what are the top 3 things you're going to do right up front to help get them? Clearly, it takes a while to come out of the hole, and I don't think business owners understand that. You put yourself in a hole, it's going to probably take you a multiple to get back out of it. So what are the first top 3 things you do to get them out of the hole?
So the first thing is doing an honest, deep dive assessment of what you have. Okay, that's step number 1. We have to identify all of the value, relationships. There's so many, everybody's like, well, the asset that everybody talks about is money. Obviously, that's important. But there's relationships that you have, there's clients that you have, there's employees that you have, there's, different programs, SBA, otherwise. There's a lot of different, let's assess where you are. And very few companies know how to do that. And even fewer companies actually do it. So that's step number 1. Step number 2 is we have to get crystal clear on what it is that they originally intended when they started this business. In other words, the end game. And that end game, everybody's like, well, how does that help me if I'm broke? It changes everything, because it reestablishes in you the cellular drive of which you said, I'm going to go into this thing that 95% of people fail at and I'm going to do well at it. And it reinstills that in you and go, oh, that's why. I just got done speaking in Houston last week. And I had 3 or 4 people when I was talking about this from stage start crying in their seats because they're like, oh my God, I forgot why I started my business. And you brought that back out in me because it's so important for several reasons. But number one reason is it wakes up that competitive fire back in your gut. And number 2, you have to have a finish line, right? You have to have, if we assess where you are, now we know where we're starting the game. Number 2, that's my end game. So then I will know every behavior, every action, every decision that I make and apply to my business, whether it's taking me closer to or further away. We lose that true north sometimes as a business owner because we become firefighters. Okay. Third piece is that radical measurement of every decision that you make and its outcome. After you've got the assessment and the end game, you assess every behavior. And here's a really good gauge. Most businesses don't get into trouble without first having gone through a period of success. Okay. And so what you can do as a hard piece of advice is go, okay, let me go back to when we were doing well, when I was making the kind of money I thought I was, when I was profitable, when my employees were happy, when my customers were happy, and when I had a little bit of time for me and my family. And you recreate. This is what a lot of people are like. Oh, you bring in a turnaround specialist. This is the first thing I do as a turnaround specialist. When were you doing the best? And we reverse to that period. And I ask a series of questions. What were you doing for your customers that you're not doing now? What were you doing for your employees that you're not doing now? What were you charging then? What was the environment like? What was your competition? And if you can just simply, the very first thing we ever do in turnaround is go back and recreate what they had already done. And you ask that question, they go, you know what? This employee, I was treating this particular way. You know what? I was going to 4 or 5 events per week and I haven't done that for a while. You know, we were priced at this level. And since then we've actually gone up in price or down in price. And back then we were doing this thing for our customers that we stopped because we thought it was costing us money, right? So those things avail themselves without any other work than just going back and saying, what did I do when I was the most successful?
Going back to what worked. And
yes,
that makes a lot of sense in being able to do that. And a lot of what you do, even as a turnaround, we do with our new clients. We want to know what got you here, where are you trying to go,
yep,
and what are your current struggles? And then we help them based on their financials build that path forward to be able to have that freedom. I mean, at the end of the day, I think business owners do this to make money, to have time freedom.
yes.
And if you're not making money and you don't have time freedom, then get
It's
help.
miserable.
It's miserable, but
Yeah.
get help. It's not that far from where you are to where you want to be. It's just you don't have clarity. And I think that's the biggest problem for most business owners. And what we try and do is give them that financial clarity so they can make the right decisions. And once they can do that, they're off and running. And if you're not in the hole, it doesn't take a lot to get from where you are to where you want to go. If you are in the hole, then we got to fill it back in.
Yeah.
And that takes a lot longer. So you keep saying everybody exits. Let's start with what does that really mean? Because I don't think a lot of business owners think about their exit.
They don't. I know I certainly didn't. You know, I can't remember the first time it was ever really exposed to me. But even when it was like, I'm never going to be able to sell this company. Like, it's me, right? Yes, I have some employees, but it's me. And I wish I could go back to I get asked that a lot on podcasts. Like, what would you go back and tell your younger self, right? There would be first thing, Keith Cunningham was my mentor and still is my mentor, but I sat on his council for 10 years. And so, that idea, there's so many brilliant things that come from him. But at the end of the day, what I would do is I would go back to myself and I would say, okay, whenever you're starting a company, you begin with the end in mind. Another simple concept, a fortune cookie, if you will, right? But it's so heavy in application and so heavy in wisdom that if you stop this podcast and you go, all I'm going to do right now is I'm going to imagine my end game and that this machine I'm building called a business is going to be the vehicle that delivers that freedom for me, right? There's 3 kinds of exits. I already talked about one, which was an involuntary exit. That is one where you go out of business. you pass away, you get divorced, like you have a partnership that goes bad, you have a health issue. There's a lot of different things that cause you to go out of business in an involuntary way. Okay. And that's 95% of the businesses that start. Number two is called dictated. Dictated means you've built one company your entire life and you're going to go through this process, which is a completely different game than your HVAC or your plumbing or your painting business or your whatever company it is. A completely different game with a completely new set of skill sets, which means that you're going to be like the guy that goes in with your car and you're going to go, I'm going to go, beat this guy up on the price of the car. When they sell 30 cars a month and you maybe in your life will sell buy 17, like 10, 15, 17. You're dealing with an expert when you get ready to sell that business, and they're going to dictate three things: the price that you're going to get paid, the timing of by which you're going to get it paid, and the terms of the entire agreement. Dictated means that you are the recipient of the person that's across the table from you dictating all three of those. Whatever you think you're going to get for the price, you're not. Whatever you think, how fast you think you're going to get paid, you're not. Whatever you think the terms are going to be, they're not going to be favorable to you. Okay. That's a dictated exit. What we talk about and what everybody should focus on is a custom tailored exit. That means that you have to avail yourself of an entirely new set of skill sets to be able to sit across the table from somebody and maybe not dictate, but at least be in the negotiation chair of price, timing, and terms. So that's what I'm talking about when we talk about timing. And what we do at Built to Exit is we inform and educate business owners, optimize phase, pre-exit phase, due diligence while you're sitting down, and then post-integration.
And that's a big part of it. I think more often than not, what I hear is business owners want to sell when they get tired.
Mm-hmm. Too late.
And like you said, it's too late. And honestly, that's where we help a lot of times is if you're tired, what I have found is if we can get your finances going again and we can get you out of the minutia of the business, all of a sudden business owners start to love their business again.
Isn't that
and
weird?
So it's weird. That's what we try and do is to help them love their business again and get the rewards they were supposed to and be able to do that. But there comes in a time or whatever in life that they decide they want to do something different. And so if they want to sell, that's cool. The cool thing is when they follow our systems, their business is far along the way. Now you just got to come in and polish it up at that point. But a lot of the things that they needed in place or the concerns have already been majorly addressed. So you can get to that end game so much faster.
Yeah. 43% of the people that bring us in on the brokerage side to help them sell, 43% of them, because you have to go, if you're smart, anybody can polish up what they have and sell it. But if you're smart, you want to optimize that sale, right? So we have an optimization process that we take people through that 43% of our clients that hire us to sell their business decide not to sell. Because to your point, they now have all their time back. It's producing more money than it's ever produced. And we've put a management team in place so that they're not needed. And they go, now it's ready to sell because it's been built to exit. And so that's a big number and great because that's an outcome for people. And then, on the other side of that, when again, we talked about it being too late, but really building your exit, everything that you teach, everything that you talk about, profit first perspective and philosophy is get your business built to exit so that you can exit it at any time. That's really the smartest thing for you to do, because to exit, to really polish it up, I'll tell you the average time is, I think, about 14 months when somebody comes in and starts due diligence on your business, which is in and of itself a strategy to knock down the price of your business. Because it's like the walk around on a car. You come in, I got Kelly Blue Book and it's worth $20,000. And then they're like, okay, great, we'll take that price. And then they walk around, they go, oh, look at your tires need to be replaced. In your mind, less 19,000, right? And then they go, oh, look at the crack in your thing. And you go, shoot, 18,000. They haven't said a word yet. They're just pointing out the flaws, right? To drive down the value of your trade-in. Same thing on a business. 14 months is there really not as a thing. It is due diligence. It's finding out all the stuff, talking to your customers, it's making sure the employees aren't going to leave, making sure there's no, dead bodies buried around. but it really is a tactic of the intellectual superior of the person who has bought 10, 15, 20, 100, 200 businesses in their lifestyle, in their lifetime.
As you talk about that, I just realized something. Most business owners, unless they've been in business a long time, haven't faced a recession yet.
Right.
They could have faced disruption. There's been a ton of disruption in the business world. The latest is ChatGPT comes along. It's not really putting businesses out of business, but along the time, Walmarts and Amazons and technology changed the game. If you're in and you're watching your trends, these things happen relatively quickly. But if you're able to sell, it gives you the ability to get out before the wave takes you out, right? You're at least in position to do that. What are you seeing currently economically? Are you seeing certain waves that business owners should be aware of that may cause them to face disruption that they're not even aware of yet?
Let me put some emphasis before I answer that particular question. Some emphasis. I sold in February of 2019. Okay. 2020 and COVID was right around the corner, and 6,800 employees, even though some of those businesses, because they were commercial janitorial, did really, really well, right? During that downturn. But to have 6,800 employees and have to go through that would have sucked, period, right? But I was ready to sell, and I dictated all of those terms. And that was, I was running the boat on that sale. So just to put a fine point on the fact that is absolutely necessary, for you to be prepped up and ready to go. Now, as far as trends, here's some things that I don't hear anybody talking about. The economy from Main Street is in a massive recovery right now. There is more money, more hope, more enthusiasm, more work in terms of revenue for small and mid-sized companies now more than in the last decade. Okay. People are not seeing that, or not saying that yet. Now, the other side of this is that I see, because there's been this massive wave of acquisitions from private equity firms. And then you have a private equity firm which has a real solid definition. They're good at what they do. They acquire businesses and they improve the net worth over time. Okay. That's a real private equity firm. Now, there's a whole bunch of people in the last 10 years, especially, that have called themselves private equity because everybody wants to get, private equity is the highest performing return on your investment of any other vertical: real estate, Bitcoin, the stock market. They outperform everybody because they found, what I know and what you know, is that small and mid-sized businesses are more dependable. They have systems, they have processes, when they're purchased properly, and then they can spool them up. And so they found that was a great place to invest, is in our small and mid-sized entities. Now you've got this other group that came in and they're just sloppily buying stuff for too much money. They don't know what they're doing. Things are falling apart post purchase. There's going to be another wave. And that wave is going to be from these junk private equity firms that are out there giving back the businesses. And it's happening. We have 7 in our pipe that we're working on, not in our pipeline, but we're working on right now, that are being given back to the original business owners because the private equity firm that bought them had no idea what they were doing. So I see a separate wave coming all the way back in the economy for people to be able to take their companies back, and for them to be able to pick up companies that fell apart for pennies on the dollar from those private equity firms. And because the other business owners are like, I already sold, I don't want it back. So I see those are 2 trends that people aren't talking about. I do see a lot more regulation. I see a lot friendlier environment for small and mid-sized business owners over the next 5 to at least 4 to 5 years.
And I would agree with you. I think what I'm seeing in the private equity space, and again, I don't know who's behind all of them. I know how those businesses start to treat people.
Yep.
They don't treat the workers well, and they hike up prices on the customers. And what that does is it creates a competitive market that a small business owner can compete against those high prices.
Totally agree.
The other thing is, I think with so much fraud and fake going on, people want to do businesses. People have always wanted to do businesses with people they know, like, and trust.
Bingo.
They're going to go back to want to do business with my local plumber, I know him, I see his kid at school. Like, people are going to want to go back to that. And so I think those opportunities are going to present themselves, and we're going to see that shift. We're seeing it globally. And I think you'll start to see it over time with business owners as well. It
Here,
just takes time.
here's physically how we are preparing for what you just said. There's a strategy that we call grouping. I haven't heard anybody else talking about it. I don't know if we invented it. If I didn't, blah blah blah. But it was where I came up with it was with another M&A partner of ours that we work with, that's an attorney, and we sat down and we said, equity is doing what they do, and then you have this other concept in private equity that's called rolling up. Okay, buying several things, and and blah blah blah. Grouping is how we're addressing this, and we have 4 right now that we're working on. We have not taken one to market yet, but we're close. And what we did was we said, rather than the private equity firm getting all of that, let's say that you live in the middle of Kansas. You have an EBITDA of about $500,000, right? And you do, I don't care, pick something, HVAC, okay? You do HVAC. And if you absorbed you have geographic barriers and hindrances, that if you did 80% of the business in your neighborhood, you could get to 750 EBITDA, right? And we know that there's a big multiple shift when you get to 5 million EBITDA. We know that you can sell your company for 3 to 4 all day long and twice on Sunday if you want, 3 to 4 times EBITDA. But when you hit 5 million, now you're getting average. This is not Jason, this is data, 6 to 12 times EBITDA. So what if we went out and did the same process, but we coupled Kansas 500,000 with Texas 1.5 million, with Ohio 1.5 million, and we got all of them to a $5 million EBITDA, and everybody makes more money because now you're 6 to 12 times EBITDA, and now you sell that to a private equity firm, or somebody that wants to buy that grouping. Right? So physically, just basically in reaction to what you just said, we are already ahead of the curve on how to address that with businesses that don't have a chance at 5 million EBITDA, but when they couple with somebody else, they do. One brand, all the scaling, all of the things that come along with that. So that's literally what we're seeing in the marketplace, and we're reacting to it already.
Interesting. We do something a little bit different. And mine is more on the marketing side, in the sense that, hey, if you're a plumber, right, and you've got to go out and get your grouping of business, make friends with the roofer, make friends with the driveway guy, make friends with the window guy. And now, if you're a group of 10 people, you don't need to pay anyone. You don't need to do anything. You start referring within your network. You're all going to get essentially free marketing. Now, coming back to your thing, if most of these, and a lot of times these people might be in and around the same business place because, they're all starting out, or they've been in a couple years, they've been watching each other. They can all come together and go to somebody and say, hey, you've got a whole group of us, and we already refer to each other. We already know how to do that. And so that's one kind of grouping. The other grouping I tell those people is, look, we got to take money out of your business because we never know. If you've got all the trades, I want you to go and buy houses because you've got all the trades to remodel, flip, rent. You can do it all. And that's where you park your excess cash. I mean, there's a million ways to take a concept or a model and then adjust it to you, what you want out of it. And even if you can't find those people, if you've got a pretty successful business on the electrical side and you're like, let's do plumbing, but I don't want to do plumbing, you can seed somebody and they can be under your umbrella and let them run that part of it.
Yeah.
You just give them some startup capital and you start referring business to them. They start referring business to you. And since you own both of them, it's great. But maybe in that one, there's a partner versus your main business doesn't have a partner. But there's a million ways to do this. And you got to figure out what works for you.
It's diversification, and that it just, your concentration risk for most people is single point of failure is their business. And the more that you can diversify, the less likely something can happen to your business and you're still going to be okay.
And again, I'm going to be back to the trades, but if you think about it, when the plumber goes in and he cuts open the walls, it's nice if he happens to know the guy to fix your wall.
100%.
And while you're in there, you got to do some electrical. Oh, at least if you're all friends,
Yeah.
you're not stuck waiting on somebody and it's somebody else's thing. You're all working together, even though you can run your own companies. And you got to figure that out in your particular vertical. It works for everything beyond the trades. You just got to figure out how it works for you.
Amen. Excellent point.
True. Biggest mistakes you see when it comes to finance with business owners?
Boy, where do we start? Because all I have to do is look at my past, right? I would say that one of the biggest mistakes is that revenue equals success. You know, that's a big mistake, and I think that you start out and you're like, I'm gonna make $5 million, and then you're like, oh my gosh, I just sold $5 million, and you're like, why am I overdrawn by $250,000? So revenue is not that. Now, even profit is not that, right? And even operating cash flow is not that. The king of all things, the biggest mistake that I see is that business owners do not understand two concepts. One is free cash flow, and two is the velocity of cash. Those two concepts can change your mindset to fix all of the issues. So free cash flow, all you do is follow profit first. And with those all those, that's all you have to do. I could give you other strategies, but if this is what you promote, and a lot of people have read that book. So just take that free cash flow and take it off the table. Taking money off the table is a must, right? The velocity of cash is the concept of taking the money that you're making and speeding it up. Like we were talking about, borrowing money from the mob. If you're going to take money from yourself, you're borrowing money from the mob, and you're going to lose a finger if you don't pay that back on time. Okay. So what are you going to put that in? And it sets your mind to say, okay, I'm going to put that in something that is going to grow faster than being in my business, so that I'm going to make more money faster. Right. And that is not a philosophy. It's something that you plan out. It's your investment strategy. It's whatever whatever you get comfortable with your wealth advisor, or yourself, or your wife, or whoever it is the faster that you can get that money working for you, the faster you're not going to have to work for it.
And I agree with you. That's a big part of the other thing. I actually came from the personal finance side. So when we look at businesses, I'm always about, let's take money out of the business and then let's make it grow somewhere else. This way, no matter what happens in the business, you're always protected. You never have to worry. And if you do it well, and we've had a lot of business owners just even reallocating their working capital, a couple of years ago, nobody knew what the word interest was. Today, we can actually make money on money that's just sitting in the business. And so we look at all of those different things to say, how do we ensure that you are always safe, and that no matter what happens, you survive, even if the business doesn't? And so I'm a big fan of that, and making sure that they actually build wealth. If people would like to learn more about you, your programs, if they're thinking of exiting and want help, how do they go about that?
I'm pretty simple. Jason Sisneros, it's behind me here. My wife got me that. I love it. But it's jasonsisneros.com. You can reach out there, or builttoexit.biz, where we've got a cool little assessment that people can get, their business assessed and stuff like that for free. But those are the two greatest places. And then also on your show, by the way.
Thank you so much for joining us today.
Thanks for having me, brother. Thank you for everything you do for all the SMEs in the world. And it's if they don't appreciate it, then they're probably not going to be in business for very long. So they should share, they should they should do all the stuff with your show, because I'm on a lot of them and yours is of high value. So thank you for having me on.
And thank you for joining us and sharing your wisdom.
My pleasure.
Hey, thanks for listening to the entire unedited video of the Profit Answer Man podcast. You can actually get the full podcast in audio only format here on YouTube or any other of your favorite podcast players. Don't forget to go check out episodes 1 through 13. They lay out the foundation of Profit First in the book and how to get started. In addition, we've got hundreds of episodes for you to check out. And if you remember to subscribe, you'll always be updated when we put a new one out every single week. Thanks for listening. Have a profitable week.